Hello and welcome to Pro Trader Strategies Market Commentary for Monday, November the 14th. My name is Eric Wilkinson. Some of you may recognize me as the Wolfman from CNBC, Fox Business, or even the Wall Street Journal for my commentary on everything from economic to geopolitical and market analysis. Please keep in mind that everything that we talk about in these daily market commentaries is not a solicitation to buy or sell any of these securities or strategies. At the end of the day, I'm here to teach you some different strategies that you can implement into your own portfolios, but please do that in your own way. The reason why I can't give you a recommendation on a particular stock or strategy is because I don't know your risk parameters, I don't know what's in your portfolios, and therefore what I'm doing could be counterintuitive to what you are already doing. Having that out of the way, let's get this on. Not a whole lot of economic data today, really actually none here in the United States, but it is gearing up for a big week ahead of us. It's going to be a lot going on, a plethora. I think just about every single Fed governor is going to be speaking from Yellen on Thursday in front of the House Testimony Committee, and then we have like Kaplan, Lacker, Williams speaking today, Rosenberg, Turl, Fisher on Tuesday, Bullard, Harker on Wednesday, Dudley, Yellen, Bernard, Evans on Thursday, and then Bullard speaking again on Friday with Kaplan, George, and Powell. So all of those Fed governors really going to be talking and could really give us some insight into what they're thinking as to the interest rate moves. Right now, the environment's really good for stocks. We're continuing to see the Dow rally, mostly due to these bank stocks really just blasting off. Some of them up well over 10% in the past week or so. So a lot of those are what's really pushing the Dow higher as there's a rotation out of like tech. So the Nasdaq's been suffering a little bit, as well as the SPOOs and the money going into banks and things like that, which is really holding up the Dow. So it's kind of a flight to quality in stocks. Excuse me. And then we have a lot of other economic releases going on for the rest of the week. We've got retail sales, we've got PPI on Wednesday, we've got CPI on Thursday, which is Consumer Price Index, a lot of inflationary data points, and then a lot of manufacturing throughout the week as well. So this week is going to be a really data intense week, so should be good for trade hopefully. Anyway, on to the overall markets. We've got crude oil /CL down slightly on the day, down about 72 cents, breaking below this little bit of a support area that I've been talking about right here. So we've gotten below that, held up on Friday, today opened up and just kind of slid through that. So interesting enough, it should probably look to want to come down here and test this $40 a handle or $40 a barrel handle here probably this week, because there is a lot of fear that there's a lot of oil out there, and there is no sign of Iran shutting off the spigot. They're just continuing to increase productivity, or production, I should say, in oil. On to gold. Gold really suffering as well, down another $12 today, and they're in that $1,200 a troy ounce mark as we speak, really. I mean, it's only $12 away, and finding support here, it should anyway, but that psychological level of the $1,200 an ounce area really looking like it is on the docket. Onto the bonds. Bonds continuing to slide today. They were down quite big earlier today, down over 2 points, down just slightly under a point right now at 26 ticks. Starting to look like it may have found its legs here. This whole interest rate rise sends the bonds down, which interest rates rising is what's leading to the idea that the banks will be able to be making more money, because higher interest rates, banks make more money. So that's why we're seeing that banking sector really take off this week, last week anyway, and continuing on today. This is what I was talking about at the Dow. Actually, when I first started this out, the Dow was in positive territory, but has just slipped into negative territory. And we had another new intraday all-time high for the Dow right there, as you can see at the 18,934 and change. So that was a new intraday high, all-time high for the Dow, and really being led by a lot of those banks and everything else. Onto the Nasdaq. This is what I was talking about. Nasdaq really suffering, down 66 points on the day. Really a pullback as people are rotating out of tech, the more volatile stocks, and putting it into some of those bellwethers and the banks for that matter. E-mini S&Ps down only about 5 points. Nasdaq is leading the way to the downside, pretty much trying to drag the entire sector, or the entire equities sector, down, but E-mini S&Ps down 5 points on the day as well. This is a breakdown of the E-mini S&Ps. As you can see, this is not a whole lot to look at. On Friday was a really quiet day, as you guys very well may know, because it was a bank holiday. It was Veterans Day. Today we're starting to see that continuation of just probably jockeying back and forth, more or less, really kind of people trying to get their portfolios in order, because it could be a very volatile week with all of these economic data points, inflationary numbers, manufacturing numbers, and all of these Fed governors talking. So it's to give us insight as to where the interest rates are going to be going here soon. A couple of things that I've done here. This is a trade that I actually put on today. I did it only because it has pretty much high implied volatility, and that worked out for my setting this up. My portfolio is really delta neutral, so I kind of continued with that theme to keep it a little bit more delta neutral with this. A lot of these data points coming out this week, I don't want to really get one way or the other until I start seeing some more information coming out. So I decided to throw in a couple of straddles or actually strangles in there, and I did also an iron condor. So, but with EA Sports, I ended up going into the December and sold the 70 puts and the 85 calls to create that strangle, and I collected it, I got a credit of $1.01 for that. So that was a nice trade there for that. I mean, because I collected that dollar, it puts my break even up at 86, which is the high basically for the EA Sports. And then on the downside, 70 is way down here. 69 is really my break even. So I've got a lot of room. That's the beauty of doing these straddles or strangles even in a high implied volatility environment. We kind of broke down below this value area high, and I could easily see it wanting to just kind of trend sideways here for a little while. So that's another reason why I ended up putting on that strategy. Then on to the triple Qs. This is one I actually talked about in the webinar Friday, which was on the iron condor, and seemed like the best one to put a strategy on. And the reason why, we got really high implied volatility still in the triple Qs, and above my rule for this type of strategy, which is more or less like an ETF. It's a basket. So this one worked out really nice. And I did this in the December as well, and bought the 109 puts, sold the 110 puts, and then sold the 120 calls, and then bought the 121 calls. And I collected 33 cents for that. That was right in line with those rules that I talked about on that webinar, and it works out quite nicely. The 120s higher than the all-time high with the Nasdaq coming off quite a bit today. We're seeing that happen with the triple Qs as well. And then on the downside, I have a lot of room to the downside to the 110, which is well below the 200-day moving average down here, and hopefully we can just get this trending sideways, not see a whole lot of great economic data or bad economic data, and that would work out real nicely for me, as we would see implied volatility come out of this rather quickly, and then I could cover that for my profit target that I talked about in that webinar. Then on to AMGN. This is one that I covered. This was a trade that I've had on for a while now, and I had it on in the December also, and I had sold the 130 puts and the 160 calls to create that strangle, and originally sold it for $2.50, bought it back this morning for $1.24. So right there, 50% of my max profit on that one. I'm also trying to get out of my Macy's trade. That's really close to almost being a full profit on that one. That one's rallied quite nicely today, and it's making that strategy look real good. I think it's up about $1.50 or $1.70, somewhere right in there, and looking to cover that trade. Haven't gotten it yet, but keep an eye on that one. I'm trying to get out of that one for about $3.80 some cents today. All right, that's all I got for you guys today. Friday's webinar is going to be on the iron butterfly, and that's going to be kind of this progression that we're doing along the lines from the straddle to the strangle to the straddle to the iron condor to the iron butterfly, and then we're going to talk about how you defend those and how we can look to take profit on those types of strategies. All right, so go to protraderstrategies.com, sign up for that. That's all I got for you guys today. Hope you had a great weekend, and if you can't take that, take it easy.